UNCTAD's 2026 World Investment Report shows global foreign direct investment rose 6% to $1.624 trillion in 2025, while Africa's inflows fell 26% to $70 billion. The rebound signals a renewed investor confidence, but remains concentrated and modest relative to Nigeria's potential. The key question is whether Nigeria is attracting investments capable of driving industrialization, creating jobs, transferring technology, and boosting exports. The next investment strategy must prioritize quality, diversification, domestic linkages, and product review in terms of productive capacity for volumes alone. Now, Dr. Adesuwa Erediauwa, coordinator, Bashir Adeniyi Centre for International Trade and Investment, of course, in Lagos, joins us to talk more about this. Thank you so much, Dr. Erediauwa, for joining us. Now, Nigeria's FDI jumped, as I said earlier, 148% to about $4 billion in 2025, even as Africa recorded just about 26% in decline of that investment. When you look at this performance, are you surprised? And what does it tell us about Nigeria's position in the global investment landscape?
Thank you for having me. So there's not quite a surprise. We need to, when you compare Nigeria's rebound and Africa's decline needs to be viewed from the lens from which it occurred, which is the baseline from 2024. There was massive investments in about $32 billion investment in Egypt, and that gave Africa that huge figure of 94 billion, I think, 94 billion in 2024. So when you compare the 94 billion in 2024 to the decline, 26% decline in 2025, 70 billion, it is that there was a decline, of course, but that was because of the baseline and the outlier of the UAE investments in Egypt that made Africa's figure really high. But with Nigeria, there was an obvious 148% increase. So I would say that it's not that investors are abandoning Africa for Nigeria, it's that it's a truer picture of investment in Africa. Because if you compare it with the World Investment Report actually says that that's Africa's $70 billion figure, headline FDI figure, is actually the best in the last 2 decades, I think. It's the best figure when you take out these outliers. So yes, for Nigeria, it's impressive. It's a good story. It tells a good story. It's a fantastic figure, which we'd like. But then, like you say, what is the quality of the investment? Is the quality that matters? What would the $4 billion, what can it do for us? What are the linkages, the development linkages? What productive capacity has it built for Nigeria? What has it done for Nigeria in 10, 15 years from now? Will that investment figure, what will it translate for Nigeria?
Yes, let's talk about it as regards quality and how impressive this investment is. Now, the report also says that much of Nigeria's FDI rebound was driven by oil, gas, refining, mining, and major asset acquisition. So if you look at it, how much of that $4 billion actually created new productivity capacity for the country? And are there some issues that are probably preventing Nigeria from scaling growth when you look at its market size beyond its current state?
So I think that is a deficiency in the report, because the report does not explicitly say exactly how much goes to or went to productive capacity. We know that about $2 billion covered the asset exchange, the acquisitions, and the investments in the oil and gas. Shell and Lafarge and all of that was about $2 billion. So, but the $2 billion, additional $2 billion, is not explicitly clear. And I think that is an opportunity for us in our reporting of FDI. We need to be able to report it in a granular manner so that we see exactly how much goes to acquisition and acquisitions of firms and asset exchanges, how much is was reported from reinvestments. We need to know how much of that is in greenfield projects, which are the projects and investments that create jobs, that tend to create jobs and improve domestic development value of FDI. What was the second part of your question?
Yeah, I just wanted to know if there are some areas that are inhibiting growth in the market despite this investment.
Inhibiting growth. Well, we're speaking about investment. When you say inhibiting growth, I'm not quite sure what you mean, but if you mean inhibiting growth of investment,
yeah,
I think investors are looking for much more than what Nigeria tends to market, which is our huge market size. So we need to be able to diversify our investment promotion strategy, if I can call it that. Investors need much more than a huge market size. They need predictability of regulations. They need policy stability. They need stable power supply. They need an environment and a business environment that that is certain and that can be priced.
All right. Thank you very much, Dr. Adesuwa Erediauwa, for sharing this with us. This is a conversation that we are going to bring up sometime again, and I will share some thoughts with you as regards to how we can attract more, not only for Nigeria, but of course for Africa. It was nice talking to you, ma'am.
Thank you.
Okay, so the next part before we close has to do with the Federal Ministry of Finance directing the National Insurance Commission, NIICOM, to suspend enforcement of disputed recapitalization fees and an escrow directive against Nikon Insurance and Nigeria Re, pending determination of a petition by the two companies. So to shed more light on this, I'm joined by Samuel Oyekomi, Lead Research and Insights at Norrin Berger. Thank you so much, sir, for joining us.
Thanks very much. Good morning. It's a pleasure.
Yeah, so quickly, let's touch on this. Now, before we even get into specific fees, if we have the time, help us understand the bigger picture. What exactly is NIICOM trying to achieve with this recapitalization exercise?
Yeah, I think a major aspect what the NIICOM is trying to do is, of course, to strengthen the insurance companies that we have in Nigeria, basically recapitalizing them in such a way that they're able to absorb some of the risk that they are undertaking. If you look at the current insurance companies that we have, almost about 50 of them, if you look at their share premium as of right now, the share capital right now is probably less than 400 billion. In other climes in the world, you have insurance companies owning banks, investment companies, and whatnot. But of course, the economy is growing. You want to achieve $1 trillion economy. You need insurance industry to have that buffer enough to be able to absorb some of this risk when they materialize. And that's what the Act in itself, that's the NIIA Act, is meant to do. Of course, increasing the minimum capital for both life insurance, for reinsurance, as well as general insurance.
Now, let's wrap up this way. NIICOM and Nigeria Re have challenged some of NIICOM's requirements, suggesting that the Commission may have gone beyond what the law provides. Now, how true could this be?
I think depending on the size that you are, right, it could be true for both ends, right? And I think these are legal matters. But one thing that is very sure is that the Act clearly gives NIICOM substantial powers, right? Section 15 of that Act that established the minimum capital requirement. And if you look at that subsection 8, it allows NIICOM again to have regard to the nature, size, complexity, as well as risk profile of any form of insurer. So of course, the NIICOM in itself has some level of powers to be able to regulate minimum capital that this insurance company or insurance companies needed to have. I think some of the conversations are things around the amount of money that needed to be put in the escrow, what's the quality of capital, and how accessible would that capital be, of course, to be deployed to the normal operating affairs of the business. I think these are where the disputes come from. But NIICOM, as per the Act that was signed by the presidency, has substantive power to be able to regulate matters around this recapitalization.
Well, these are an ongoing conversation. We'll see how the regulators will react to this particular dispute between the entities involved. But Samuel Yekomi, thank you so much for the time that you accorded us to really touch on this. Hopefully, we can bring you back and we'll have you share more details with us on this. It was nice talking to you.
Yeah, thanks for having me.